We have a query that's coming in from Ravi, and he's on the line with us from Bangalore. Hi, Ravi. How can we help you?
Hey, Sumera. Very good afternoon. So my query was, I'm holding around 1,000 shares of Manappuram Finance, averaging around 203 rupees, which I bought over a period of time. Like my horizon is I can hold for 1 year, but I saw today I think it's fallen more than 10-15%. I'm really worried. After I bought, like I've almost lost 15%. So can I hold this, or like should I switch over to any other this thing? So I wanted to know the expert's view, madam.
Sure, absolutely. I mean, I can understand, your concern. Mayuresh, let me come to you first. Results were anything but great. In fact, it has been the highest decline in their AUM quarter on quarter ever. I think it's at the AUM itself is at a 6-quarter low. Of course, in cash market, F&O, we're seeing a selling frenzy. What do investors do now?
Afternoon, Sumera. No, you're absolutely right. I think if you probably judge gold financing companies, how their AUM growth is taking place or shaping up, I think is extremely critical and pertinent. What you've seen in terms of what we've seen in terms of the degrowth over the last few quarters, I think that's indeed a very, very surprising number. Gold financing companies supposedly should be having resilient models in terms of cash flow dynamics with the loan to value that they carry. And again, I think the kind of capital adequacy that they probably have and the NIMs and spreads that they enjoy. But I think the second wave, and I think the first wave last year as well, I think that entire effect of the last 3 to 4 quarters has actually played out in a very adverse manner, specifically on the gold financing business. The other businesses apart from gold financing, I think there can be some expectations of recovery happening. But again, I think recoverable collection efficiencies after the second wave can be expected to improve. Second half is where the recovery will be. Albeit standing where we are at this point of time, I think it has broken through all its supports at this point of time. So I think the only hope, because the investor probably is holding on to the stock, is that if the stock gains certain amount of price strength, there's a lot of supply, Subera, between that 180, 185. It definitely needs to cross that if it's going to make a re-rating in terms of a reasonable amount of return for the investor at hand. So I think broken through supports, weak fundamentals, earnings are probably a little bit on the lower side, may improve in the second half. So I think the only hope is that if it crosses over 185 and gains some price strength.
Okay. So Ravi, there's the advice for you. Anything further you want to, any other doubt you have?
No, I think, thanks for the thing. And also I had another query. I'm not sure if I can ask now.
Okay, go ahead.
This was regarding the Srei SREI. So I'm holding another 1,500. Again, I bought it around 15 rupees. Now I think it's trading around 9 or 10 rupees. So should I hold it, or should I switch over to another infrastructure? Because there was a lot of thrust on infrastructure. I thought I can, at least I'll be able to see some profit. And I've been holding for almost 18 months. I can hold for another 1 year.
Okay.
Well, absolutely. My advice to investors would be, I think, to look at qualitative names. So yes, if you want to pursue the infrastructure story, which is very, very good from an Indian context, with government capex picking up steam, a lot of private capex expected to come through, and infrastructure generally expected to pick up a huge amount of execution met demand. I think you focus on leaders. I think that's the appropriate way to put this. If you look at the laggards within the space itself, I think if you see the market mayhem right now, I think any sell-off that probably happens, corporate governance issues, so on and so forth, too many things to tackle about. Go for leaders within this space. I think you have less things to worry about in that case.
Vijay Kumar is on the line with us from Bengaluru. Hi, Mr. Vijay Kumar. Good afternoon, sir. How can we help you?
Hi, good afternoon. Hello?
Yes, go ahead, Mr. Vijay Kumar. What's your question?
See, I purchased Srei Pharma at 8:30 sometime in June, 50 shares. And ever since I purchased, it has gone down. Now it's now 18% down. So what should I do now? Whether I should hold on to it or book loss and come out of it and catch a fast-moving train in Bombay parlance?
Yeah. Wouldn't we all love that? Mayuresh, how does he shift from strides to something that'll offer better prospects? I mean, does he even do that?
It would make sense, Sumer. I think the numbers, obviously, I think the margins for strides did get impacted with higher costs. So the US revenues did improve quarter on quarter. It was almost 58 or 60 million odd dollars, if I'm not mistaken. New launches, its own existing products actually helped that run rate coming through. Again, I think the management is hopeful that that quarterly run rate of 60 million for the US business should maintain. They're also hopeful that margins should return back to that 19-20 odd percent. And therefore, I think the kind of operating leverage that one expects with new product launches, expectations of more filings, approvals coming through, and pressures on gross margins coming off, which means that EBITDA margins expected to be in that range, would probably scale up the earnings going forward. However, I think at the current context, earnings still seem pretty weak. There is obviously the demerger of its biopharma business as well. But I think margin improvement is going to be the key. Whether that happens in the next few quarters is really a large unknown at this point of time, depending on too many outside and external factors as well. So my suggestion would be that you can very well run on to stocks which are probably grooving in the right direction. You can probably have a look at exiting these stocks on balance.
Hussain Kachwala has written in from Mumbai. He has 3,000 shares of Federal Bank at 86. He has 4,000 shares of Subex at 65. And he has 450 shares of NTPC at 118. Mayuresh, so this looks like a part of his portfolio. Any changes that you would recommend, considering that the outlook he has is for the long term?
So within the three, Sumera, I think Federal Bank obviously had some amount of moderation, specifically in loan growth. The deposit growth was also muted, while CASA was somewhere around 35 odd percent. Now retail deposits surprisingly are around 93 odd percent of their overall deposits. When you come to asset quality, I think when you're looking at the slippages number as well, on an annualized basis, almost around 2 odd percent of the overall book. The PCR remains very, very constant at 66 and expected to improve gradually going forward. Restructured book at 1.9%, that's a substantial increase from 1% at the end of FY21. And what probably happens in terms of the gross NPAs, net NPAs, that have restricted ROA and ROE movement as well. So I think the management in their con call was pretty confident that the second half recovery should probably start coming through, and the worst is probably now reported on their books. So yes, assuming earnings recovery taking place and when the placement of the stock is, you can very well hold on. For NTPC, again, I think it's a classical story in terms of how much of generation capacities are expected to come up. The growth in the regulated business is growing at a very, very fast clip. So strong demand dynamics, growth in the regulated business, which ensures them reasonable amount of ROEs of around 15.5%. They are doubling the renewables target. They're also getting into the hydrogen part of the business, also the EV part of the business as well. Dividend yield is quite strong, and therefore I think all these dynamics indicate and are probably suggesting that earnings should probably remain stable, so can hold on to that one as well. So Subex, I think it's clearly broken off. So I think the entire thesis about their platform business, and yes, I think that part of the business can very well do wonders over the next few quarters. However, I think the reported numbers are coming a little bit soft at this point of time. So earnings recovery has to come through. That can get supported and accentuated by the price strength as well. There is a strong cluster of support, so there are between 40 and 42. I think Rahul is a better judge of that. But whatever I've seen, I think if that cluster probably breaks off because it's come off on the back of weaker numbers, I think then there can be more trouble for the stock. So I think watch out for this one. The rest too can be.
Okay, the next query today is from Chandru, who has written in from Hyderabad. He has also sent us 3 stocks. He has 10 shares in Praj at 330, 55 shares in Rain Industries at 346, and 79 shares in Srei Renuka at 21. Now wants to know what to do. Okay, Mayuresh, any of these 3 stocks that you like and any of them that you would recommend a change on?
So Praj definitely is a proxy for that entire sugar story, right? I think the entire ethanol story that is playing out, the kind of order book that has been burgeoning for Praj Industries, and the change in terms of dynamics of reported numbers quarter on quarter, year on year, are improving for the better. So with an improved order book, revenue visibility actually goes higher. And as they're able to execute well, I think that entire leverage on their balance sheet starts playing out beautifully in terms of reported cash flows and strong earnings. And earnings which are very, very strong and compounding are stories that we like. So you can definitely hold on to Praj. The only point that I would raise is 300, 310. I think that's a very, very important support cluster for Praj. On the other hand, I think within the sugar story itself, I think a lot of sugar stocks have rallied. So I think Renuka also rallied along with the other sugar stocks as well. Dynamics improving thereof as well. But currently, I think the stickiness in terms of price strength just not being there with Renuka at this point of time. And with the UP elections coming up, I think what probably happens with SAP prices, FRP prices, a lot of politicization might happen with the industry as a whole. And within that, just purely because of price strength not being there on Renuka at this point of time, you may very well look at exiting the stock.